Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, there are more and more items detailing the intensity of the global slowdown. American claims for unemployment insurance filed last week came in at almost 1.5 million and far higher than was expected. More than 20 million people are on these state programs, which typically last about 6 months. That varies by state. Then you're on your own. US durable goods orders bounced back better than expected in May from April after two terrible declines, but April was an awful benchmark. But they're still 21% lower in May 2020 than May 2019, a decline of almost $51 billion for the month, and that will hurt. New orders for non-defence capital goods are down only 9% year on year in May. Otherwise this would be seen as a disaster too, but in the context of the times it's better than expected. US merchandise trade deficit in May came in at $72 billion, and much worse than for March or April, and almost as bad as for May 2019. Not helping was that exports fell 36% year on year, while imports fell only 26%. In Mexico, their central bank chopped 50 basis points from their policy rate, taking it down to 5% even. That comes after the usual terrible retail and trade data for April and May were released. And India is moving to impose restrictions on imports from China. In China, even though there are some very mixed signals and export order levels are weak, their economy does seem to be staging a minor recovery. Importantly for them, however, is that it won't be trade-based any longer. It'll be based on internal demand. And the Chinese are no longer out buying up the world. Chinese outbound M&A activity in the first 5 months of 2020 collapsed compared with the previous years to barely 30 deals per month. New outbound deals by Chinese firms for January to May have fallen 71% in volume and 88% in value compared with the same period in 2019. Australian job vacancies recorded their largest fall ever in the past 3 months, and workers were laid off in record numbers. The US Treasury 10-year yield is unchanged at 0.68%, and the gold price is marginally lower, down $4 to $1,762 an ounce. Oil prices are firm marginally, now just under $39 a barrel in the US, and the Brent benchmark is just over $41 a barrel. And the Kiwi dollar is firmer in a minor move up today, now at 64.3 US cents. On the cross rates, we're up slightly too to 93.5 Australian cents. Against the euro, we've gained to 55.3 euro cents. That means our trade-weighted index has firmed slightly to 69.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.